Hello and welcome to FX Bully Academy. Welcome to this weekly focus. We'll be looking at the market and what might happen for this coming week and what has transpired. So last week we were looking for the market to move from this area to that high, and what then happened it is that the market moved higher but failed to take out that high and then came and closed as a bearish candle. Therefore, what you'll then notice is that on the weekly chart, the low and the high of this candle was not violated. Therefore, for this week, I then marked the low and the high of that other week's price action. I see that today we've already taken out the lows of last week's low. And what I'm looking at this low as a place where liquidity is resting, where this market can come, take out this low, right? And then after taking out this low, and then we can start looking for buys. Therefore, I'm looking at this as liquidity that is resting below the market. If you will remember from the lesson of market structure, we need liquidity to be delivered from one side to the other side. So I'm viewing this low as liquidity. Therefore, I would really appreciate it if the market were to take out this low and then we move higher. But as you will see on our 4-hour chart, if that doesn't happen and the markets decide to move higher, we'll move with that. But our overall market direction, it is still bullish. We're still looking for bullish moves to the upper side. Therefore, when you go to the 4-hour chart, you will see that last week I said that I was looking at this order block as a place where when the market takes out liquidity, the market will be able to move higher. So what then happened is that the market moved high, came and swept liquidity below this low, slightly tap our order block, and then we moved higher up to that high, right? I then put a horizontal line in this area, looking at saying that this area is my target when the market was retracing, and the market retraces, took out this low, tapped in deeper into this order block, and then the market moved to that high. And the market retraced from Thursday and Friday. The market then retraced back into the range where it began, right? And then it closed right there. And then for this week, we then discover that the market then opens and then drops lower. So if you understand how the market or a candle is formed, so if we're going to be bullish, then the market needs to open, drop lower to make the low of the week, and then goes high and then close, right? So as I'm looking at this, I am looking at a dealing range, our previous dealing range, and saying, what was our previous dealing range? Have it been broken yet? So if I'm looking at a 4-hour chart, I have this low to that high as a dealing range. Below 50%, the market retrace, took out this liquidity over here, and we're looking to move higher up to those highs. And last week, this is what we were expecting from this area to move up until that high. And that didn't happen. The market then came back. I'm having this low as last of last week's low. Last week's low has been taken. Last of last week's low. It is where I think a lot of liquidity is built up. And I have a dealing range. I have a strong low here that I do not want to see being broken. The good thing about that low, it is that it is above this liquidity that I'm looking for, right? So my bullish market structure is still intact. I have a strong low in this area. I have liquidity that needs to be taken out. This liquidity has been taken out. Now I'm looking for this one to be taken out, and then we can move higher. But if the market is happy with only taking out last week's low, and then we then start moving higher, then that's also fine with me. But I would really trust the market if it were to drop lower, take out these lows, and then give us a nice CRT. Then we can look for a move that is sustained. I must admit that the previous week there was a lot of consolidation, because as you can see from when the market opened, we had a lot of days where we're having an up and down within the very same area. So if you're to look at this consolidation, we have a high of the consolidation and the low of the consolidation. the market takes out liquidity from above the consolidation high and brought it below the consolidation low. And we are looking for the market to come and then go above those highs and eventually to those highs. All right. So at the moment, what I'm seeing it is that I still want the market to take out this liquidity over here. It is still within my dealing range. If the market does that and we find a nice entry, I'll be taking it above those highs. And even here, if you take a look, the market closes below this area. Give us a CRT. You would have traded that if you're looking for that to go above that high. But as for me, I'm looking for this low that will be a high probability. Then I can take entries from this low and I can be targeting those highs. That is why I'm not interested in this CRT at the moment. I'm interested to see what the market will do below these lows, and from there I can start looking for the market to move higher, because I'm viewing this low as a strong low. If you are looking at this, you can see the market had this high, this low to that high. We then came back, took out liquidity, and then we moved higher. So all this liquidity helped us to move even higher, to break those highs, right? So at the moment, we're looking for this liquidity to give us the very same effect, so that we might be able to go higher and have fuel to go higher. So we didn't only look at this pair only. So the other pair that we looked at was Flip X1 last week, and I said that the market tapped into our 4-hour inverted fair value gap, and I said last week I was looking for the market to move high, which it did, and we have still not reached that high. And what then happened is that the market this week, we are still looking for the market to move high. It is closed above these candles aggressively. Therefore, we see that the momentum is to the upper side. Therefore, when you go to the 4-hour chart, what I then saw it is that last week we had an opportunity to sweep below these lows, tap one more time, and then we moved higher. So this moment, what then happened is that we had a retracement into a fair value gap, into an order block. I was looking for a CRT setup right here. I then got it and I took it. Instead of exiting at the CRT 4-hour high, I opted to go to that high, as I know that it will be moving for the whole week to the other side. So how did I enter this? I then went to a 15-minute chart. I waited for the market to take out the low. And then when the market went above this order block, that is where I was looking to take an entry. So the market closed. I waited for the market to come back. I was looking at this as liquidity that needs to be taken out. The market needs to come to this order block and not violate it. And then from there, I was looking for the market to come to the CRT high. At the moment, I know that we might have a retracement. Then the move can continue to push higher, and I'll be looking for such a move up until it reaches those highs. So this is what I'm looking for. I'm still looking for the market to push higher. And until we speak again next week, happy trading and stay safe.